Hello and welcome to Crypto Weeklies. My name is Josh, and today we are discussing about a new feature on our website. This website, the cryptoweeklies.com. The link is in the pinned comments as well as the description. This is the website that we have developed for the community. It stores all of our analytics and forecasts, several indicators that we try to discuss, which most of them are developed using machine learning techniques and AI techniques to uh, and as well as statistics to forecast uh, either the crypto prices on their USD pair or on their other crypto pairs such as Bitcoin or ETH. And the secondary purpose of the website is the indicators which are updated on a daily basis, such as the crypto TLDR, PeakValley. The TLDR focuses on 24 hours worth of news action. PeakValley Indicator is about checking if the market is currently closer to a peak or closer to a bottom, or what is the overall risk. The risk meter at an individual crypto level, and the narrative cloud, which is a word cloud which checks which of the narratives are popular and sorts them by their popularity on a wall. And last but not the least, today's indicator that we have just developed is the CryptoRetirer. We'll start with the CryptoRetirer. This is BTC currently holds the BTC related bear case, bull case, and the base case. Based on the compound annual growth rate based model, the current price of Bitcoin, and then using a 8% compounded annual growth rate, which is the bear case for BTC, and these numbers are not calculated without any consideration. They have a purpose. So, for example, 8% is close to the returns toward in stock markets annually, compounded annual return. And this is the extreme bear case for BTC, because if BTC tracks indicator on in stock market, then it is not providing as much reward as it used to. Over the last 10 years, BTC has had a compound annual growth rate of about 47%. You can check the sources for this one. I'll put the link. So for example, over here, you can, if you type in BTC CAGR, which is the compound annual growth rate, for the last 10 years, this compound annual growth rate was at 47%. This is the Economic Times, and this is the data that they have shared. So we are not forecasting the Bitcoin price at 47%, because we know that the bear case would not be as bullish as BTC was over the last decade. So we are just being conservative with our price forecast. The blue line is the price forecast at 8% CAGR. You can see this one. This is the price forecast, and the red line is the number of Bitcoin needed to be a millionaire, based on 8% compound annual growth rate. So right now we have considered 2025 as same price as the current price of BTC. The price for this model for 2025 is at around 69K. We are being extremely conservative with this model because the purpose is with just not a financial advice, but a conservative model where we are forecasting how many BTC would a person need to retire as a millionaire. So for this one, currently the number of bitcoins, if you divide 69K, 1 million by 69K, you would get 14 and a half. Almost, if one has 14 and a half BTC today, they could be a millionaire and retire with 1 million USD. And for each 2 years, you can see that in 2026, if the price of BTC, that 8% growth rate, is at around 74K. We were at 73K not too long ago. So a growth from 69K to 74K over a period of 1.5 years is ultra conservative. So at that point is at around 13.35 BTC. And let's go to now to 2030. The link is in description. You can hover over each of the year, and based on if you are planning to retire at around let's say 2030, you would need and you estimate only 8% Bitcoin growth, which is again ultra bearish, then you would need at that point around 9.8 BTC. Now let's move to 2036. The number changes rapidly. That's the beauty of exponential growth. CAGR model considers exponentiality. That means that year over year, the compound annual growth rate is at 8%. So what was $100 at year one becomes 108 at year two, and then 108, 8% over 108, and then subsequently the base keeps on incrementing by 8%. That's the beauty of exponentiality. Then at 2036, even in an extreme bear case, where today one for 1 million, one person would need around 14 and a half BTC in 2036. That would be at around 6.1 BTC needed for being a one to reach 1 million in terms of BTC. And we have tried to limit this model to about 2040. At that point, for being a millionaire, one person would need at around 4.5 BTC. This is the ultra bearish case. Then the base case, which assumes 15% CAGR. This is also not a random value. There are several articles which speak that the crypto market could grow at around 30% compound annual growth rate over the next decade. We have taken a conservative approach and divided that CAGR by 2. Instead of looking at 30% year over year growth, we are looking at 15% year over year growth. And with this model, what was a journey in bear case from 69k to all the way to only about 219k in that is 219,000 BTC at 2040 at 8% growth rate. If you change this model to about 15%, you'd find 2025 to be around at the same price, but in 2040, instead of just 220,000 per BTC, this model at 15% forecast $564,000 dollars for one BTC. So you get the idea. So in this scenario, if you believe this is the base case and you are not ultra bullish or ultra bearish on BTC, and you have a target age of retirement, target time frame for retirement at around 2030, instead of 9.5 BTC, this 15% CAGR model forecasts a necessity of only 7.17 BTC to be a millionaire. And if you have your retirement horizon far later, that is at around 2040, you would need only 1.77 Bitcoins to reach the millionaire status. The last case is the bull case. This considers 22% CAGR, almost 50% of the 40%, 47% CAGR that Bitcoin had over the last 10 years. We are taking a 50% of that CAGR that BTC currently has been growing at. So in now you get the idea. At 2025, a 69k BTC would at 22% CAGR would be worth at around or almost $1.4 million. This is again the beauty of compounding. And then exponentiality takes care of what today would need 14.5 BTC to retire as a millionaire. In 2040, you'd need only 0.7 or just over two-thirds of BTC, two-thirds of one Bitcoin to be a millionaire in 2040, assuming 22% compound annual growth rate and the Bitcoins staying that maintaining that 22% CAGR year over year for the next 15 years. So in this scenario, if your time horizon to retire is at around 2030, you'd need 5.3 BTC. If your retirement is in 2032, then you would need around 3.5 BTC. And there is a lot of confluence with this level, 3.5 BTC. That is an aspirational goal for many for many investors we have read across the internet. So this model reaching that confluence is also a good sign. This is the description for this particular indicator that we have developed for the community. You can read it up, and the purpose is clear that uh, to provide insights on how many Bitcoin would be needed to accumulate 1 million in net worth, as well as how Bitcoin's price would have its journey across the years at a set compound annual growth rate. Just to summarize, 1 BTC at 22% growth rate in 2040 would be at around 1.3 million. One would need slightly more than two-thirds of BTC to be a millionaire. At a base case level, 15% growth rate, that forecast would be at around 560,000 BTC, um, dollars per BTC, and in that scenario, 1.77 or little more than 1.5 BTC would be needed to be a millionaire. In terms of ultra bear case, BTC in 2040 looking at 220,000 USD, and 4.5 Bitcoin would make you a millionaire. So this is the first crypto. It made sense to start with Bitcoin with on this retire with crypto series, the CryptoRetirer, like we like to call, because Bitcoin offers the most likelihood to be around as a major crypto in 2040. It has been number one for the last 10 or 15 years, depending on how you measure it. The Bitcoin has been the number one crypto by market cap. Then uh, if that gets extrapolated for the next 15 years, you could make a case for using models such as this to go on with your own retirement journey. This is not financial advice. There are risks associated with BTC, like there are with most investments. So take all of this content with a grain of salt. And now, before we call it a day, we are not going to do any forecasts for today. We'll just look at the sentiment, the analytics over the last 24 hours, some of the bearish narratives, Bitcoin falling below 69K is bearish, but Grayscale saying that ETF outflows are reaching equilibrium, are in per our machine learning based bird based model is kind of bearish, but you can make a case for it being bullish long term as well. Um, this related to transaction fee, that is a bearish narrative, and equally and opposite, there are three bullish narratives. Bybit uh, deciding to list a few different altcoins, as well as stablecoin issuer integrating with BNB and Ether, as well as major gains for SHIB are some of the bullish narrative. You can go through with all of the narratives in a TLDR fashion. The purpose is making most of the most worth of the time that we have as we go about our day-to-day life, looking at 50,000 feet, how many sentiment is bullish, how many is bearish, and what is neutral. So the peak and valley, which is our one of the major composite risk metric. These are some of the peaks in terms of risks. You can see they correspond well with May and November of 2021, when crypto market was overheated, as well as the valleys, which are the cool down phases, or phases near the bottoming for crypto market. You can see even in August to October of 2023, when the market was substantially less bullish than now, our peak valley indicator did flash green. Green means ultra low risk, red means ultra high risk. Right now, we are in this risk regimen between zero point 0.3 and 0.35 over the last 30 days. There were some instances where the risk went beyond 0.35, but then again it came back down. Over the last 24 hours, the risk went down from 0.34 to 0.32. So this is, and in the larger scheme of things, when the risk is below zero point 0.2, that is a great time to purchase, and when the risk is above zero point 0.6, that is a great time to sell. This is not financial advice. This is just historical crypto performance and composite risk score, which is again a single metric to quantify all of the risk in the associated with the market, as well as looking at several statistical measures that we have listed over here. You can go through the description. And then last but not the least, we discussed the peak value, then the risk meter. This is again a normalized risk score between 0 and 1 based on KPIs that went in the PeakValley indicator. That indicator considers all top 100 cryptos, and this is individual risk for most of the top 100 cryptos by market cap. You can see some of them are pretty low risk, beyond below 0.5, whereas some have crossed the threshold beyond 0.8 risk. So based on your own risk appetite, you can consider one crypto over the other. I'll just briefly go through. There are some cryptos which have a lower risk score than BTC. They make a compelling argument over here. So this is again, all of the content is available for free and you don't have to sign up for it. And the last but not the least, we'll look at the narrative cloud. This is the word cloud that we recently developed. This considers the last 90 days worth of narratives associated with crypto, and based on their frequency, they become the either most talked about, which takes the most area on this wall. And you can see most of the popular narratives, not surprising, are the top market cryptos, crypto, then Bitcoin, Ether, Solana, Cardano, the bullish sentiment, the altcoins related discussion, and ETFs are taking most of the space in the overall crypto wall. You can say this is the narrative cloud. And also one of the major narrative right now going around is the Bitcoin halving, which we are about, I think, 9 days away from Bitcoin halving. This is coin market cap. uh, and then you can take a look at this narrative wall to look if the altcoin or any narrative related to industry is featuring on this wall. That means that is being talked about a lot over the internet. So just wanted to make this available so that you can see where your narrative lies in terms of popularity across the board. And with this, I would like to conclude this video, and hope you like this journey that we are on related to uh, crypto related development and feature releases. If you like this content, if please subscribe to the channel, also give this video a like, and hope to see you again tomorrow with newer forecasts. And hope you have a nice day. Bye bye.